I think it takes 20 to 30 years for a new technology to diffuse to 80% of the world, or 80% of the educated world. So I think you got to look out over the course of a generation. William Gibson has a famous phrase. He said, the future's already here, but it's not evenly distributed. And so what you have is you're always going to have some people that are going to be very hypersensitive to new technology, and others that are going to go slower. There are plenty of people with a lot of money in the US and Europe that don't have smartphones, right? And so the smartphone revolution really kicked off in 2010, and that was 13 or 14 years ago. 2009 was the iPhone 3. So 14 years ago was the smartphone revolution. And if you ask anybody in their teens or 20s or 30s, of course, they grew up with these things. But you'll find a lot of people in their 60s, 70s, 80s that don't have smartphones. And especially, let's take, do Warren Buffett and Charlie Munger, do they have smartphones? Like about 4 or 5 years ago, they bought Apple stock, but they still haven't bought Microsoft stock. So, but what do they have? They have $1 trillion balance sheet. So there's a lot of money in the world that's in the hands of people that don't use the internet, that don't use smartphones, that aren't definitely tech savvy. And so there's going to be a long tail, call it a 20, 30, 40-year tail, where that money is going to gradually get invested and reallocated into the Bitcoin ecosystem. But it's not like in 24 months, everybody with money in the world wakes up and realizes this. And I've said, so what's the right forecast? It's highly likely that what you have is a serpentine growth, right? Where you're going to grow with a slope of 40 or 50%, and it's going to be cooling down from 45 to 40 to 35% to 30% to 25 to 22 to 20% annualized over the course of the next 20 years. It's like something like that, but you won't get a perfect exponential. What you'll get is a surge up followed by a crash down, and you'll have this serpentine pattern growing. So there is a cycle. What will drive the cycle? Lots of dynamics. A regulation will drive the cycle. Halvings will drive the cycle. Awareness will drive the cycle. Apple will drive the cycle. Big tech will drive the cycle. Technology will drive the cycle. War will drive the cycle. Panic, hyperinflation will drive the cycle. And it'll look different depending on what country you live in. For example, Bitcoin is already at all-time highs in places like Argentina, or Lebanon, right? Or if your currency collapses, you're already at the super cycle all-time high. But in other places, it isn't. So you got to consider frame of reference. So I don't think this is a problematic thing. What it means is, if you're trading Bitcoin with a time horizon of less than 48 months, then there'll be some point where you might be underwater in your latest purchase. And the important point is not to panic and to look out 10 years. And at the same time, the world's not going to be rational overnight, but you don't want it to be rational overnight, because statistically, you're much better off if Bitcoin gradually adjusts up between now and 20 to 30 years from now, if it gradually matures, because that gives you 30 years to dollar cost average. Yeah, you've got 30 years of earnings ahead of you, and you can sweep those cash flows into Bitcoin at a discounted price, right? And you've got 30 years of alpha, of knowledge. You're always going to be smarter than the person 25 years ahead of you who isn't sensitive to the crypto economy, hasn't figured it out yet. And there are a lot of these institutions and governments. Think about it. There are large insurance companies and large governments and bankers. They're going to be 10 years or 20 years after everybody else, because there's so much inertia in their governance, right? They might actually evaluate a new idea every 3 years and take another 3 years to study it and implement in another 3 years. And actually introducing a new Treasury reserve asset in 9 years, that's pretty fast for a country. right? How long did it take for the central bank of a place like Norway or a sovereign wealth fund to buy Apple stock? How long does it take Berkshire Hathaway to decide to buy Apple or Microsoft? 10 years, 20 years, 30 years? So you're going to have those delays, but those will keep the world from delaminating. You don't really want it to go much faster. Like if I said to you, hey, everybody in the world watched our podcast and they realized that we were right, and then they all bought Bitcoin. Well, Bitcoin would be $5 million tomorrow morning. And then your number one thought in your head would be, dang, I didn't get the chance to buy it. I was going to buy it for, would you buy Bitcoin for less than $5 million? Ask the question. Would you? Would you buy it for would you buy it for less than 5 million? Yeah. So but the point is the next decade, you can probably buy it for less than $5 million, right? Yeah. That's a benefit to you.
Absolutely.
Right. Like if you know what's going to happen and you're working at McDonald's making $10 an hour. Well, when Bitcoin goes up by a factor of 100, right? Then you're not making $10 an hour. You're making $1,000 an hour. You see, if you're taking the $10 an hour and you know something nobody else knows, so you convert the $10 an hour into Bitcoin right now, then you'll look back in 20 years when the rest of the world figures it out, and then you'll realize, wow, I was actually making $1,000 an hour working at McDonald's because I was sophisticated financially. But if Charlie Munger and Warren Buffett watch this podcast, and if they figured it out, they have $160 billion of cash right now. If they understood that they could buy $160 billion worth of Bitcoin, it would go up by a factor of 10, and they would make $1.6 trillion in the next 12 weeks. That would be good for them, but it would be bad for McDonald's guy. It'd be bad for every worker, because they would lose the opportunity to front run Berkshire Hathaway. You see, so it's going to go up. It's going to go up cyclically. It'll grow fast. If I said I expect 40%, it'll grow 80%, and then it will crash down 30%, right? There's no way that the world is able to adjust in a perfect exponential. That's not the way that markets move. They overshoot and they undershoot. And so that's why you kind of have to have a steady hand, and you have to have enough education to have conviction. And, if you're trading with 20x leverage, you're not going to be able to hold that position through the entire cycle, right? And if you're trading with 20x leverage with a mark-to-market, on FTX, right, you might wake up and find out that the exchange wiped you out due to a clerical error on their fault. And then you sue them, and then you find out they bankrupted themselves. And so you're standing in line behind $10 billion of creditors. And so you could be right and still wrong. So you have to be careful about how you execute your investment strategy and what counterparties you trust and what time frame you take. But, as a general rule, simply allocating your long-term portfolio to Bitcoin, looking out 10 years, and then enjoying the ride is probably the wisest course of action for the average person or the company or any investor for that matter, in my opinion.